Welcome to the Women Choosing Growth podcast, where we bring you practical advice and guidance on how to grow your business and achieve success in your entrepreneurial journey. We feature inspiring stories of success, challenges of growth, and lessons learned from women entrepreneurs, industry experts, and thought leaders who have been through the growing pains inevitable as an entrepreneur. Whether you are just getting started or are looking to scale up your business, our show is designed to provide you with the tools, resources, and community you need to grow your business. Join your host, Tina, a lifelong entrepreneur and business growth advisor, as we explore topics such as marketing, sales, finance, leadership, and personal growth, all tailored specifically to the needs of women entrepreneurs. So if you're ready to grow your business faster and smarter, and learn from the experiences of those who have traveled the growth path before you, then this podcast is for you. Thanks for tuning in, and let's get started.
Welcome to another episode, ladies. I am your host, Tina Sue, and I am super excited about today's guest, Melissa Broughton, founder of Busy Bee Advisors. She knows finances and taxes are not often greeted with a smile or excitement, so she uses humor when educating and guiding clients through complex, often frustrating bookkeeping situations. During our chat today, we discussed some basics as it relates to foundational bookkeeping habits, but I especially enjoyed the conversation about taxes. We discussed different scenarios, including acceptable business expenses, when you can write certain things off, and even more in depth on what triggers an IRS audit. So if one thing is clear, it's that there's a lot to learn and that there is no one size fits all when it comes to keeping the IRS happy and off of your front door. So it really boils down to understanding the guardrails that you can have in your business and having a really knowledgeable advisor helping your business throughout the year, making the best decisions for you and your business. Melissa's background is in corporate accounting and auditing, and that really complements her desire to serve as a financial translator and to help small business owners feel confident for their business decisions. Her new book, The 4-Hour Bookkeeper, helps business owners master finances in as little as 4 hours per month. And ironically, Melissa and her husband work together at Busy Bee, and he is a tax professional, and she works on the books for all of their clients. So they also have a humorous, because, why can't you just laugh at taxes and finances, right? So they co-host a popular podcast, The Real Buzz, taking the sting out of taxes. So I'm excited to dive in with you, Melissa. Welcome to the show.
Hey, Tina, thanks so much. Happy to be here.
I am so excited for you to be here. As we were just talking briefly off camera and before the recording, there's a lot of buzz, pun intended there, about people taking various different methods and advice on how to escape taxes. So I'm glad that you're here with us today so we can talk about why the tax system is not always our best friend, and what you've seen and learned through your expertise, tax and bookkeeping side. So this is one of those subjects, like we mentioned, that sometimes I feel like even my clients want to push that stuff aside, but it is so important for business owners to really know who they can trust on the tax and bookkeeping side of their business.
And that's so true. It's, we can't avoid it. We absolutely cannot. You cannot just put your head in the sand and hope it will go away. It's something that two things are sure: death and taxes. And yeah, right.
Exactly.
But it is incredibly important, I believe, to find a tax professional that you feel that you can have regular conversations with, not just somebody that, maybe slides a form in front of you and says, sign it, that type of a thing. Because we've certainly encountered those tax professionals in our career as well. So
Yes. I've had personal experience with that before my current tax professional. It was fill in some boxes. And I don't think they even ever looked at the tax return, much less any kind of guidance towards what should I be doing, what is normal for, what I can and can't have on my taxes as write-off or business expenses? So many questions, so many questions.
So many questions, and so many questions that my experience from talking with clients is that they have so many questions that they don't even know what they should be asking as questions. And so when we feel, and I think this happens especially for women, but when we feel like we don't know enough to ask an intelligent question, we then just don't ask questions. And for myself and my firm, it's really about opening that conversation with clients and meeting them where they're at and getting to know them and their situation, and then spending sometimes a lot of times educating on the questions that they should be asking. So we're educating our clients on the questions to ask us to educate them.
Yes, I love that. I love that. And so we just talked about this is not a subject that everyone loves talking about. So how in the world did you and your husband get into this being something you actually enjoy every day and love? So can you share a little bit about your journey of how you
Sure.
started Busy Bee Advisors?
So I did what a lot of people did. I went to college. I had a pretty good idea of what I wanted to do. I had a mom who worked in finance, and I remember spending, sick days from school when I was very little. I really remember spending days under her desk. She was the finance person for a bank. And this was, of course, in the 70s and early 80s when everything was paper and they still had the, calculator with the tapes. And I remember all this calculator tape like flowing underneath, and it just created a little bit of magic for me. So I knew that I wanted to be in the world of finance. And what drew me to it is the simple fact that 1 + 1 is always going to equal 2, right? You don't have that necessarily that people component. I worked in corporate America for about 15 years, maybe a little bit longer. I don't want to date myself too much, but we'll say 15 years. For about 15 years, and I started out as in a few different companies as a bookkeeper, then full charge bookkeeper, and then as my experience grew, controller, VP of finance, just a variety of different positions, and had some auditing experience when I decided that I wanted to branch out on my own when our oldest son was born. So 23 years ago, I worked as an auditor for companies that felt like maybe something wasn't right, or they had a feeling that somebody was, had their hands in the cookie jar. So
that kind of auditing. Okay.
That kind of auditing. Yes. So fraud auditing, I guess, is what you'd call it. And, finding the information and then just presenting the information to the clients. And I found it to be very interesting, but it was sad when somebody has an inclination that something is amiss. And then I get to say, yep, you're right. And here's all of the information. What surprised me was that, 9 times out of 10, the clients that had hired me that had the belief that maybe something wasn't right financially were usually correct. And it would be a business partner or somebody that they trusted that was just stealing. And I mean, we're not talking about $100. We're talking about tens of thousands, $100,000, more than that. And I really, I burnt out pretty quickly. So the money was fabulous to work as an outside consultant, and word of mouth was good. Referrals were good, but I hit a point where I just really wasn't happy doing that, and went back to corporate America. And then hit a point in my life where my oldest son was ready to, he was at his ending part of his high school career. And I felt like time was going by way too fast. And the job that I was at, I was a controller for a manufacturing company. My commute was an hour or so each way, which was awful. And then I was on top of that working a 60+ hour week. And I just finally said, it just didn't work. There was no balance. And through a series of very entertaining events, left that position and decided to start a bookkeeping firm, and really just wanted it to be kind of a side thing that helped helped us bridge the gap for all of the extras that came up. My husband was a nurse at the time.
Oh,
Right. So
interesting.
it's very interesting. So started the bookkeeping business, put all of these processes in place that I knew needed to be there, and just hit the ground running. And within the first month, the business like took off. And 3, 4 months later, I started talking to my husband about, hey, you should leave your job and you should come and work with me. And it didn't really take much to convince him to take the leap. So he retired from nursing, went back to school, and he had had some experience in finance. His family had owned a small construction company when he was growing up. So he was familiar with things that I wasn't necessarily familiar with. And together it made, it just became very complementary. So we knew that for us to work together, there needed to be some separation, right? Like there's
Yes.
only, so I love him.
Good
He's the best
advice.
guy in the whole world, but there's only so much time that you can be together. And
Hmm.
so we decided to have him go like the tax route. So he took the tax route and I maintained staying on the bookkeeping side of things. And that's really been, we're both licensed and all that stuff as far as taxes go, but that's really been what we've found complements both of us the best.
Hmm.
What he found fascinating, though, as somebody who's not really been in, except for his family's business, is that the other tax professionals he would talk to and that we would network with were order takers, which you
Yep.
mentioned earlier. They were taking the information from their clients and they were just putting it into boxes. Maybe they were reviewing it. Maybe especially if it was a larger firm, what we found is that they weren't even reviewing it. They would have some junior associate, reviewing it. And it wasn't that they weren't in compliance or doing anything illegal or wrong. It just really wasn't serving their clients. And it becomes an interesting balance. It's funny to me that there can be these huge life events that people will have, like buying a house or having a baby, and they will forget to put this on their tax return. And if you're not a tax professional who has that relationship with their clients, the basic form that most, tax preparers will have their clients, the interview checklist is usually what it's called, is it has basic information on there, but if clients omit things intentionally or not,
Right.
there's no basis of knowledge to know to kind of push back and ask. So
Hmm.
it's
Again, that's a form you're filling out that they're plugging those numbers into a
yep,
box in some firms, not all firms.
sadly it's in most firms.
Yeah.
So and if you're a business who's a startup business, you're probably dealing with a junior. If you're working with a larger firm, you're probably dealing with a junior accountant who maybe they don't even have the knowledge. So they're going to take the information and make sure that they're doing what their training has taught them to do, which is to put the information into the correct boxes on the forms.
Yep.
And and any advice or any guidance that's given is like retroactive. So it's you if you have in that case a good tax preparer, that good tax preparer is saying, okay, well, we've done your return and for next year this is what you should be doing. And I don't know about you, but I feel like every year goes by faster and faster. So if we already are
Yes.
right, if we're already in a position where we have a total aversion to where we want to put our hands over our ears, we're not listening to what that tax professional is telling us. So
Yes, exactly. One of the things that you have mentioned that I absolutely love, and we, laughed about it, I'm sure, like you'd like to make light of tax situations. And
I
one of the
do.
things that you hang your hat on is that the tax system is rigged.
Yep.
So I think you had shared with me, there's over 6,000, almost 7,000 pages of tax code. So
Yep.
the average Joe, even the smartest business owner out there, probably doesn't know most of those what's in most of those pages. Is that fair?
I think that's fair. And I think so. So let's start with the fact that as people, I think when there are things that we have in our minds decided we're not good at, when those things are presented to us, that we tell ourselves, okay, I'm not good at this. I can't understand it. And it's like, we just don't even try and take it in.
Yeah.
And most business owners, and of course, there's probably people out there listening that are like, I'm not like that. Well, you would be the exception.
Yeah, I totally am raising my hand in that. I know I'm not good at taxes. I'm a finance queen, but I don't do taxes. So I am the first one to say, not me.
I would say for me, I am not a craft person. So when somebody says, when scrapbooking was all the rage, I was just like, nope, that is not me.
Me neither. Yeah. Not even going to try.
There's so many, 6,800 pages, a little bit more than that, of current tax code. And if you're just the average business person, your information that you get on taxes and the tax code is most likely what you either hear from a friend or somebody you trust, or it's something that we call it the Google education, where you've gone onto the internet, which is a fabulous tool, and you've, typed in something, but even that only gives you like part of the picture. And so it's the theory of if somebody knows your situation and understands your situation, and then that professional in their minds can say, okay, these are we'll say strategies that will work for you, and here's how we're going to implement those strategies. That's where the magic really happens.
Yes. I love that. And that's really where the consulting piece comes in place and that's one of the reasons you work with your clients all year round, so that you're understanding their business, understanding their family, understanding their situation, so that you can make the right recommendations, because all 6,800 pages doesn't apply to everyone. You have to know what's going on, right?
Right. Absolutely.
To know which strategies make sense.
So one of the things that we found through the pandemic, that if anybody out there listening has employees, is that it became very difficult for businesses not only to find talent, but also to keep talent, right? It was horrible. And it's starting to get a little bit better, or what we're hearing from our
finally, but it was years. Yeah. It was even past, it was past COVID. I mean, COVID's still here, but it's past the
COVID time. Pandemic. We were able to socialize with each other. One of the things that we started to look at was we have to figure out a way to help our clients keep their employees without breaking the bank, right? So revenue for the client's business has gone down, which means that they can't afford to do huge bonuses or raises for their employees. So what can they do? And one of the awesome things that you can do as a business who's profitable is you can offer an education reimbursement. So if your employee has student loans, you can, give them a tax-free bonus of, let's say, $250 every month to be paid as a student loan. It's a deduction for you, and it's tax-free income for your employee. And it also says to your employee that, I really care about you. I really value that you've taken the time to get this education. And it's something that you can do to keep employees more, more loyal, and to stop them from walking out the door. Just there's so many different things like that, but that's not the same conversation that I would be having with somebody who was a consultant who had no staff.
Right.
There's no one size fits all in this. And so it's, we went and we had a client who heard about this tax strategy conference, and they wanted us to come with them and they were more than happy to pay us for our time, but they wanted us to come with them to see if this was good information, which I thought was very entertaining. And the speaker's whole point was we spent 4 hours listening to them talk about hiring your kids. And that's fantastic, except our client who had invited us doesn't have children. So that's 4 hours of time. Right. So there's definitely not a one size fits all. No. There's a one size fits most on some things, but
yeah. Or their kids are like 2 years old.
Right.
It's gonna be a while. Right. It's gonna be a while before you can hire them.
Well, there are things, there's modeling things and different things like that you can do. But yeah, you're pushing it a little bit at that.
Yeah, pushing that red flag. Hey, incredible women entrepreneurs, it's Tina Sue here. I know you're juggling a lot, growing your business, managing family time, and trying to find balance. Deep down, you know you're capable of so much more, but maybe fear or uncertainty is holding you back from achieving that dream business, that dream life that you deserve. That's why I created the Dream Big, Plan Bigger guide, a game changer for your business growth. This isn't just another goal-setting document. It's your personal roadmap to achieving the impossible. Imagine having a clear vision of your biggest dreams, breaking through the barriers that hold you back, and reigniting that passion that fuels your journey. This guide is your roadmap to doing just that without compromising your family time or your personal priorities. You deserve to see your business thrive and still have time for what you love. Let's take this journey together. Download your free Dream Big, Plan Bigger workbook now at tina-sue.com and start making those dreams a reality. Now, let's get back to the show. What are like the top 5 things that you've seen when we're thinking about business owners that are in growth mode, either have staff or, building a business that's going to have staff shortly? So that's about where our listeners are. What are some of the things that generally is not being shared with the people who might have tax accountants that are the order takers? What are some of the things?
I think that depending on the industry, of course, always having separate accounts for your business and your personal. And if you're more of a traditional business, that becomes a no-brainer that you would have separate accounts. But if you're a consultant or, let's say, in the real estate industry, a lot of times they will not necessarily understand the reasoning why to keep things separate. So separate accounts for business, that's a super easy one. Keep an eye on when it makes sense to hire. I think when we're in that startup mode, it becomes very tempting to do it all ourselves. And it is getting easier to hire, but it is certainly still a challenge to hire. And, we were talking before the call on kind of if I wanted to share some of the, not mistakes, but some of the things. I had a bookkeeper that worked for me for close to a year, and I noticed that she was starting to become not showing up at work every day. We'll just say that. And then started to notice, she was becoming very comfortable. And long story short, she walked out the door and took about half of our clients with her. So there's, and I don't say that to make people out there fearful, but there's definitely certain things that you can do to protect yourself, like having a non-compete clause in their employee contract or things like that. But, determine for yourself kind of where the benchmark is, what you'd like your earnings to be, and when you are willing to make that jump to hire. I think that is huge. Corporation is a big one.
When you say corporation, is that like whether it's an LLC or what do you mean by corporation?
So when I say, and that brings a good point up. So when I say corporation, I mean determining when they want to go from being a sole proprietor, where their income and expenses are, of course, reported on their personal income taxes, to a corporation. And that can either be an S Corp or a C Corp. An LLC is actually not a business entity type. An LLC, if you think of an LLC, think of like an umbrella. So an LLC is like a level of protection that keeps your personal assets shielded from anything that may happen with your business.
Yes. And can you have that same shielding from if you're incorporated and not an LLC?
It's a little bit more of a protection, but usually what we recommend for clients who are looking at corporations is that they do either an S Corp or a C Corp election. You choose the type, there's pros and cons to both, and then you would add that LLC on top of it. I love the umbrella visual, and it's something that most people can kind of wrap their brains around. And it's like, okay, so you should still do it, but let's do the corporation and then the LLC to kind of wrap it up in a neat little bow to make sure your personal assets are protected from anything that may occur with your business. Because we live in a litigious society, and it's good to protect yourself.
We do.
To go back to my favorite soapbox is that, the tax system is rigged. Not only is it rigged because most tax professionals out there are essentially order takers, where they're taking the information that the clients provide and putting it into the correct boxes, but the client doesn't know what the client doesn't know, right? So Miss Business owner who has a startup business, she's been Google educated, and she's making a guess on what's a legitimate business deduction and what's not. And what I've found in most cases is that the majority of people will actually err cautiously. They're far more conservative than to be aggressive. So most people who own startups, especially, they don't want to do anything to put any attention on themselves. And the scariest thing, if you were to, survey a room full of small business owners, they would probably say the scariest thing to them would be to be audited. And we will have talks with people about why audits aren't scary. If you're keeping your documentation and you're not doing anything that's illegal or unethical, an audit is simply the same thing as the teacher checking your homework.
Mm-hmm. What usually causes that audit?
Oh, talk about a topic that's like all kinds of myths. The biggest thing that we've seen consistency with clients of ours or I shouldn't say clients of ours that have been audited, but people that have come to us that are going through an audit, is that they have maybe used a program like TurboTax or like H&R Block software or some kind of a do-it-yourself tax software. And usually what will be the first thing that will trigger an audit is that there's math that just doesn't add up, right? The math is not.
How's that possible? Isn't that what TurboTax is supposed to do?
It is supposed
it's like
to.
The system. You plug the numbers, it prints off your tax return.
So so think about it this way. So you have this small business owner who, and we probably see this at least still once or twice a month. You have a small business owner who has done their taxes previously themselves using some kind of do-it-yourself software. They get a notice from the IRS. They see it. They go, nope. And they I don't know, put their hands over their eyes and somehow stick their fingers in their ears, and they either throw it away or they lose that notice and they ignore it. Well, then the IRS then thinks, or the state agency then thinks, well, there must be some reason why they're ignoring it. And then it becomes a bigger deal. So
interesting.
I would say business ownership 101, the most important thing, if you receive a notice, you need to respond or reach out to your tax professional and ask them the best way to respond. But don't ignore it.
Don't ignore it. That throws up the red flag.
That throws up the red flags really fast. Now, there is a lot of truth to the fact that if you've been audited in the past, that you have a higher likelihood of being audited again. I'm not sure what the reasoning is behind it. Maybe because if there's been issues in the past, they assume there'll be issues again. I'm not sure. But the IRS and the state, at least California, will admit that if you've been audited in the past, you have a higher chance of being audited.
Interesting. Okay. So first off is having bad math on a do-it-yourself website is one of the reasons. What are some of the other reasons? And obviously this wouldn't be all inclusive. There's many reasons you could get audited, but what are the biggest things to avoid?
Sometimes if there's been money that's been pulled out of a retirement account, if you're not of age, so if you're not of the appropriate age to pull money out of a retirement account, that will be something that will trigger a red flag. I think the third most common thing, and I'm just talking about things that we've seen in our firm. Sure. I think the third most common thing that we've seen is somebody who their income doesn't match up with what has been reported to the IRS. So If you accept credit cards, if you accept money for your business through Venmo, through PayPal, through Cash App, all of those are reported. All the, Venmos, Cash Apps, PayPal, they used to not have to report. Well, 2 years ago, that compliance changed. And so all of the companies that are, accepting payments, and even if it's, supposed to be a, payment to share among friends, like what Cash App was designed to be, they're now reporting. So if you're showing, I had $50,000 in sales this year, but the IRS is getting reports that you should have had $150,000 in sales, that will trigger an audit really quickly.
Interesting. Okay.
Yes. So it goes back to when paperwork comes in the mail, you either need to have a professional that you're comfortable turning it over to, or at least look at it, acknowledge it, and determine what you need to do with it.
So it sounds like, going back to what you originally said on this particular topic, that so many people are afraid of the IRS, because I have a ex-colleague that went through it, and it sounded like a nightmare, to the point where I would please don't ever let that happen to me. It was like a year and a half worth of an audit for him and his company. I don't know. So, but it doesn't sound like it like, if you're not reporting your income, that deserves an audit. So it's really something
and
obvious.
So, yeah, and it becomes but only X amount hit my account, or, it was, a lot of it was for personal things, or all, there's all kinds of reasons, but yeah, you need to make sure that you're reporting all of your income.
So it's not as scary as I guess a lot of business owners are. Like, if you're doing the things right and you have documentation on your expenses and you're recording and reporting accurately, it's not going to be a year and a half audit typically, if you've got your ducks in a row. Okay. I guess that's what I wanted confirmation on.
I'm going to say 90% of the time, not as scary as everybody fears it is, as long as you acknowledge and respond in a timely manner to the paperwork that they're sending. Where it becomes scary is if you've been, and we've seen this as well, if you've been accused of something by the IRS that just doesn't seem right. They make errors too. So we had a client last year that came to us. They were referred from a friend of theirs, and they were in the process of being audited. And essentially the IRS was stating that they had received notice that this particular business that our friend or our client owned had brought in something like $500,000 in income. And it wasn't possible. I mean, he said maybe half of that, but there's just no way. And in that case, you really need to, as a business owner, look at when you need to reach out for help. Maybe it's help beyond your tax professional. Maybe it's you do need to, and this scares a lot of people, but maybe you do need to reach out to a tax attorney. And we have a few tax attorneys that we have excellent relationships with, just because there is a point when you do need to bring in the big dogs to defend you and to make sure that your rights are protected.
Mm-hmm. So follow normal guidelines. But then when it comes to some of these other 6,800 pages of tax code, and when we're talking about not knowing what to know, how do people know if I could have saved $10,000 in taxes? Or for companies that are making a lot of profit, it could be even more. So how does someone go about? I mean, we don't want to Google, right?
We don't want to Google.
Yeah, we don't want to Google or Chat GPT these days. So, hiring someone like yourself to be able to help educate that. How else to do it? How else to be educated?
A really good place to start, if you're somebody who wants to educate yourself, is to go to irs.gov and type in tax deductions for, and whatever your, a generic title for your business. So don't get too specific, but let's say you own an auto shop. So tax deductions for auto mechanics. tax deductions for hairstylists, tax deductions for, you could put in tax deductions for small business owners. You're probably going to get a pretty big list, but that's a good place to start. That'll give you a good idea of where to start. But I would also say reach out to a tax professional, maybe reach out to 2 or 3, interview them. It becomes similar to, and being that my partner is also my husband, we laugh at this, but it does become similar to dating, where every business owner deserves to have a tax professional that they feel like they can have an open conversation with.
Yes.
If you feel as if when you get on the phone with your tax professional that you are uncomfortable and they make you feel stupid or less than, they're not a good fit.
Or just another number. Yeah, which I feel is the case because they're filling out a form with your information. And I've seen that on some of our clients' information too. Like even in an audit, that some of the firms are like, we entered the information you gave us, so you're on your own. Like no consultation, even if there's an audit. Like we put in the numbers you told us, so it's on you. Like instead of being like, hey, this doesn't seem to line up on your P&L or whatever, right? So like, because no one's really looking at that in some of these firms.
And there's other things that are red flags. Meals and entertainment is another one. If your meals and entertainment expense is ridiculously high, that's something that I believe will cause at least some questions to come back from either the IRS or state agencies.
Travel, probably.
Travel is another one, especially if you're in an industry that, like, if you're an auto mechanic and you have $30,000 of travel that you're reporting, that's probably going to raise some red flags when it catches up. But just, I think the big piece that I would encourage people to understand is that there's really nothing that we can do, with the exception of cash transactions. And by cash transactions, I mean paper money, not any apps. There's really nothing we can do as a business owner that isn't monitored anymore. So understand that anything that's happening is being reported on your behalf by whatever company it is, whether it's, Visa, MasterCard, or Venmo. And you need to be able to report it to make sure that you're not having things assessed based upon the higher number. Because of course the IRS and the state is always going to go with the higher number.
Right. And then that documentation comes in play, right? So someone could report their income correctly, but if they're inflating their expenses to reduce their profitability, therefore taxes, that's where, in an event of an audit, you better have receipts for those so-called inflated expenses.
And,
right?
and depending on the size of the business or how many moving parts there are, I will sometimes recommend like a 12 or 13 pocket accordion file folder to clients. And, each pocket is all of the income and all of the expense documentation for each month. And then you have your taxes and you put it in there and file it away for 7 years.
I literally used to have that same exact, because back a few years ago, everything was on paper, every receipt. One of my businesses was paid by the government for home health care. And so like even gas receipts, the little tiny, had to save those. Back in the paper day. It's harder with technology now. You get an email that says you have this expense that was charged to your card. And, unless you're diligent about printing some of that stuff out, it is hard to find.
It is. There's programs like QuickBooks Online that are out there that will help you you can attach things electronically. So you'd have your documentation that way. But not to plug my book, but wrote a book on all of this to kind of help small business owners work through the minefield of bookkeeping and having it not be something that they're adverse to, where they feel like it's taking them dozens of hours every week to do it, and just to make it a simplified process.
Yes. And I can't wait to read your book. I haven't read it yet, but the thought of some of the clients that I've met with that don't reconcile every month, it, gives me hives, because I was reconciling to the penny with my businesses every from day one. But, there's some business owners out there who are like, yeah, I'll reconcile that QuickBooks
I'll get to it when I can.
Or at tax time when that, that rush comes in. So the fact that you in your book are simplifying it to a couple hours a month, that's it. Then you're good. And you don't have to spend the whole month of January looking for receipts before your tax person calls you.
Yeah, that's horrible. I mean, that's like
it is horrible
for a test. It's just it's not worth it. You leave, I think, so much behind as far as deductions go. You're you're doing yourself a disfavor by doing it by waiting until the last minute. So,
well, and it's with anything else, right? Like from a business advising standpoint, like your financials are your historical, but you use that to project your future. So if you don't even know how much you truly spent last month because you don't have all your receipts or transactions in your QuickBooks or whatever, like how are you making good business decisions?
Well, and you never know. I mean, you don't know what the future holds. We can make our best guesses. You have kids that are older. I have kids that are older. We try to educate them on like savings. Put money into savings because you don't know what's going to happen. And it's the same thing by doing regular reconciliations with your business, by staying on top of your business's finances. Not only does it help you for taxes, but it will also help you. Let's say you need to get funding. There were, not to go back to the pandemic again, but there were a lot of businesses that needed to reach out and needed to get funding to get them through the pandemic. And it was sad to me to see businesses or to hear of businesses that were not able to even apply for anything because they had nothing in order as far as their finances went.
Yes. I can agree with that 100%. I remember hearing some of those businesses, or really what you would perceive to be successful businesses that didn't have the cash flow set aside to weather a couple months.
Right.
And but otherwise they're a boom in business. So yeah, that was true colors of some business owner strategies too.
And 3 months is the very minimum that you should have set aside. 3 months of your businesses, your average business expenses. It doesn't have to be the highest month of expenses that you've ever had. Our business certainly with payroll is higher in the months that like April is a really big payroll month for us because we're bringing on additional staff to help with just getting through tax day. And we wouldn't necessarily use that as our month, but we would take the average of all 12 months, and 3 months is the absolute minimum that should be stocked away for that rainy day in case of emergency.
Yep, I agree. And in some industries, it's 6 months, depending on like how fast their growth is and all of the things. So
6 is the goal, 3 is the minimum, right?
Yes, exactly. Love it. So your book, what is the cliff notes of that?
So the 4-Hour Bookkeeper is really about breaking your bookkeeping tasks for your business into 1 hour a week. So you have an hour, you make an appointment with yourself after doing some kind of foundational work. You have an hour every week that you're scheduling with yourself, and you know exactly what to do when your butt is in your chair to do it. And when that timer goes off, and I even say set a timer for an hour, and when that timer goes off, you stop. It works and it's really funny because when my boys were both little, it was kind of what we would do when we either had to go through clothes or clean their rooms or anything like that. It was like, okay, we're going to set a timer for an hour. And when we know that this task is not going to last forever, we're more inclined to do it, and we're more inclined to be excited for it, the next week when it comes up. So,
and then how many times when the buzzer goes off is like, oh, that's not so bad. I'm just going to finish this up.
That becomes a personal choice, right? That becomes a personal choice. But what I was seeing was that we would get calls, and of course we love, on the bookkeeping side, we love to help everybody, right? But we were getting calls from people who I felt like I was telling them, and the book really started out with like Cliff Notes versions of, look, you don't need to hire us. This is what you need to do. And then that became longer. That became, certain parts of it became more in depth. And all of a sudden I realized that it was like 150 pages, and I added some more thoughts to it and went a little bit more in depth on certain things. And then it was a book.
It was you don't need to hire us, but yes, here it is in the book. Tell me a little bit about your podcast.
The Real Buzz, we dive into tax strategies. So Eric and I have a blast on there. We spend a lot of time laughing and talking about taxes and different tax codes, and kind of we'll dig into different tax codes. So travel is the one, is one that you mentioned earlier. So we are in a position with our clients where our clients will actually reach out to us and say, okay, this is what I want to do. How do I do it? And write it off, which is fun. They're seeing it as fun, not drudgery. And travel was one that we had the question come up quite a lot. And so we did an episode on travel. There's a whole bunch. I mean, I think we have 25 out right now. There's probably another 25 podcasts that we've been interviewed on, but I think we're quite entertaining to listen to, and hopefully people walk away with some education as well.
I love it. I'll make sure that we link that too, because that sounds like it'll dive into specific ones, which we weren't covering today because we've got such a variety of listeners here. So yeah, we'll definitely link that. When it comes to kind of wrapping up everything we talked about today, what is your advice for the business owners listening?
Just be mindful of your money with your business. The easiest way to do that is to have separate accounts for your business finances versus your personal finances. Reconcile the accounts on a regular basis. And by regular basis, monthly is really what you should be aiming for. If you find that you're maybe a month behind, make it your goal to get on top of things. We didn't really talk about this, but think about setting a budget for your business. Not necessarily to limit your spending, but to have benchmarks for yourself on, where you're at now to get you to where you want to be. But the biggest takeaway is find a tax professional that you feel you can communicate with and who communicates with you throughout the year and doesn't just wait until tax season to say, okay, give me your numbers so I can put them in boxes.
Yes. Love it. All right. I appreciate you and all of this good information, and hopefully we can save some people listening on their taxes and can even dive in more with your podcast.
Yeah, I hope they take a listen, and I'm thrilled that I got to be a guest on your podcast. One last thing, though, I did want to offer all of your listeners a free copy of the 4-Hour Bookkeeper, and you'll have all the details on how they can get it in the show notes.
Yep. I have the link right here.
Awesome.
Perfect. All right. Thank you again.
Thank you.
I hope you enjoyed today's episode. Please be sure to hit subscribe on your favorite podcast platform so you never miss an episode. The Woman Choosing Growth Show is not just another podcast. It's a tribe of women helping each other grow. So please share this podcast with all the women entrepreneurs that you would love to see succeed. If you'd like to know more about customized business advising through Cultivate Advisors, download business tools, or sign up for upcoming events, visit www.womenchoosinggrowth.com. Once again, that's www.womenchoosinggrowth.com. Remember, we are in this together. See you on the next one.